Look at where we are in the earnings season and look at the underperformance we have seen. For that, I want to take a look at some charts in the Yahoo Finance Interactive, the charts that you got to keep your eyes on this morning. One of them is just simply the NASDAQ composite. Yes, the Dow yesterday had its worst day of the year, and in fact, its worst percentage drop going back to late November. But the NASDAQ has really been the epitome of the negativity that we have seen thus far this year, because we have seen so many underperformers within tech specifically. So that 12% drop for the NASDAQ for the year to date is definitely notable. And of course, a bigger drop when you go back to the highs where it was in late November. So that's the first chart that I am watching. Now, as part of that NASDAQ underperformance, of course, you have exhibit A within that, I guess, which is Meta. So here's yesterday's drop for Meta Platforms. That meant, and Bloomberg flagged this, that the stock fell out of the top 10 largest publicly traded companies in the world. And we have a graphic of that as well, looking at those 10, because this isn't just limited to the US. This is looking globally as well. Apple, of course, remains the largest. Tencent now, and TSMC, Taiwan Semiconductor, edging out Meta and those top 10. Now, it's still in the top 10 in the US, but again, going back to the Wi-Fi Interactive and just the incredible underperformance and turn downward that we have seen in these Meta shares. The shares are down 38% year to date. They're down about 24% over the past year. And this kind of tells the story about the changing mindset in some ways. Yes, it's partially Meta specific, but it also has to do with the sort of changing mindset about growth more broadly. And then finally, the other chart I want to check on has nothing to do with tech, and it's oil, because I think we have to keep our eyes peeled for what's going on in the oil markets based on what's happening in Russia and Ukraine. And you can see here, obviously, oil has been climbing, and you and I have been talking a lot with folks about potential $100 oil, $150 oil even. Oil is pulling back a little bit today on the latest headlines. As people try to game all this out. Natural gas, by the way, is still heading higher. At the moment, it's up by 3% today. But I think we have to really keep our eyes on commodities. That's not even talking about gold, by the way, which I know we're going to get into later in the show. But commodities really front and center right now, Soz.
Julie, I'm afraid to even go fill up my car this weekend. I don't even want to go to the gas station. Do not want to go at all.
I mean, but again, it's this sort of changing regime, right? Changing regime. We saw it last year, by the way. Energy stocks outperformed last year sort of quietly, even though we were still talking about tech and growth stocks. Energy did very well. And then going into this year, we have just seen this incredible rollover in tech. Can we talk for just a moment about the Archiverse as well? By the way, Brian Sozzi, speaking about a rollover, we saw Kathy Wood on CNBC yesterday defending her strategy, really offering a robust long-term defense of her strategy. Here's this so-called Archiverse and what's in that ARK Innovation ETF and what these stocks did yesterday. Here's an equal weight look at that. It's all red. And there are a couple of, and let's look at the extended session as well, because you can see what these guys are doing this morning. And there's a couple that stand out to me. Roku is in her portfolio, right, is in this, and it's obviously down this morning sharply. And then look at the stock right next to it. That's DraftKings, and that stock is down 16.5% after it had disappointing numbers this morning.
Julian, I'll just add this too. And I think what the move we're seeing here in tech and big cap tech, it's not just, you cannot blame it on the fact that, hey, interest rates may rise starting in March, and that's bad for tech stocks. You're really getting the sense coming off this earnings season that big cap tech players, and a lot of tech players, I should say, finally realized they have to start investing even more in their businesses. Look at what Facebook is doing with the metaverse. Roku last night ramping up its pace of investments. So many tech companies right now are trying to crank up these investments to, I think, support some of the valuations that the market has assigned to them over the past few years. So again, it's a big adjustment process, I think, on Wall Street, trying to understand and figure out how much these companies are in fact going to spend.
And it's one that investors clearly are not going to be patient about, at least at first blush, right? We may see people coming back in over the coming months. We shall see.